Good afternoon. It's Brian Shannon from AlphaTrends.net. Today is Monday, the 22nd of December, 2008, and the market closed. The S&P 500 finished with a loss of 65 cents, or 2.18%. We can see here that it came on light volume, and again, the only thing that pays is price. It is going to likely be light volume for the rest of the week. Obviously, the market's closed on Thursday, and I'm not sure, but we may have a half day on Friday. I have to check into that. But last week we had seen the market get above that 50-day moving average for a day. But again, it's the direction of the 50-day moving average that's more important, and it was unable to find enough buying to get above that two-thirds retracement level from the election high to the lows that we've seen. So this is going to continue to be a very important level as far as resistance at the about $30.85. The trend line that we've been watching was broken, obviously, in here today as well. We saw that the market gave up some of that support at 29.50, and I was suggesting on Friday that basically breaking below 29.50 would be important because it is that trend line and these prior lows, and that the next level of potential support would be found down here at $28.75. Today's low was actually $28.74, and then we got a very nice bounce. I mean, it's hard to say a really nice bounce, but we got a big bounce here at the end of the day with some heavier volume, and it got it back up above the daily VWAP. So for now, it looks like we remain in this range of basically $28.75 up to $30.85. That's our range for now. Again, the trend line was broken, and if we continue to hammer away at this support at $28.75, then we've got to look at the next levels lower, and the more important one right now is down at $27 a share. So risks remain to the sellers. That's what I had said Friday, and that's where it will remain for quite some time, as we do remain in a primary bear market. Let's take a look at the Russell 2000. Russell 2000 was down 94 cents. It also saw a strong bounce, maybe a little bit even stronger here as it got nicely above the daily VWAP here at the end of the day, with some of the heavier volume that the market had seen. So you've got to be quick in this market. A lot of people will complain about the low volume, but there's as long as there's range, obviously, in price, there's opportunity. It means that you have to go very quickly in your trades. It's basically in and out day trading still, but there's tremendous opportunities, and you got to be quick to take advantage of those opportunities. On an hourly time frame, we'd seen that this trend line had held, and on Friday it said basically that if we break below this trend line here and this support, then it would probably put us in for a test of this trend line, which is exactly what we have seen here. So we've got some support now that we can identify along this trend line and that $46 level. So that $46 level will be the important level for this market going forward. We're below the 5-day moving average. This is just a bounce within a primary downtrend. That's all this, this whole rally we have to still look at as guilty till proven innocent, because we're in a primary downtrend. But again, there's going to be opportunities both, either way, long or short. The oil market continues to just get hammered in here. It was down 7.3% on the USO, losing $2.43, and pretty much closing right on the low here today. So once again, no one can claim to have purchased the low. I know a lot of people, based on emails, are trying to purchase the low in oil, but bottoms are a process. They're not an event. It's going to take some time, and the risks are still to the downside. It still seems like it's down too far too fast, but with these liquidations going on of hedge funds and people taking tax losses, the evidence just isn't there for any purchase in these markets. So we've got a clear downtrend here in the 30-minute time frame. We've got a declining 5-day moving average. We've got this prior support right in here, acted as resistance for a couple days, and then today we saw again that the market broke down. This support in here acted as resistance at 32, and then we saw sellers come back into the market right at the end of the day. The financial market, financials were down 43 cents. Obviously, we remained in a downtrend here. This market was unable to get above the 50-day moving average, while a lot of the other markets did. So the 13 level was obviously and will continue to be an important level of resistance. If we can get above there, if this market can hold above this level at about $11.30 on a closing basis and not make a lower low, then perhaps it'll take this high out and continue higher. But there's nothing here to suggest that at all. The market remains very weak. We've got this trend line that's broken. That, if you remember from Friday, was also the neckline of this head and shoulders pattern, and the height of this pattern is from $14 down to $11 a share. We take the height of that, subtract it from the breakdown point, and it gives us a price objective down just above $9 a share. Again, I would say you don't want to set that as your target. That's a potential area where it may go. What we have to look at is that there's other places along the way where this market may encounter some support. That first level right here is that $11.50 share level. That's this low right here. If it can hold above 11.5, maybe it can rebuild in here. Maybe we're just turning sideways. It's still obviously in a primary downtrend, and a test of those lows wouldn't be unusual. So you have to, again, remember that the trend, trading these shorter term trends, it's obviously lower. There's nothing here to suggest we saw these little higher lows, but the market was unable to make a higher high, and we saw continued selling in there. Late day, we did see some buying, not as strong as in the Qs, and definitely not as strong as what we saw in the Russell 2000. Still closed well below the daily VWAP in here, and this market just remains a mess. Friday had pointed out on this daily time frame that it looked like the market was making this little triangle in here as well, and that trend line is going to be right in here, important to that. So we've got to just remain very defensive in this market. The semiconductors, let's take a look where that was on my screen. We're down 40 cents. Holding above still this $17 level, though, on a closing basis. We've still got a declining 50-day moving average, so it seems as though the market's trying to find some support in here, but there's really no reason. Just because it's finding support doesn't make it a purchase, unless, of course, it begins to rally on the short-term trends. Here on the 10-minute time frame, we had seen this little trend line break. We're back below the 5-day moving average. The 5-day moving average is declining. We've got these lower highs and we've got lower lows. We can look at that on the 30-minute time frame and get a better handle of it. Perhaps this level is going to be tested as well from the lows, down near 1650. But really, that 16, I think obviously 17 is an important level for this market. About $16.65 below that, and then maybe at about $16.20. But we clearly have these lower highs here on the 30-minute time frame. Let's see, how far this little rally travels if it makes another lower high, and we've got the lower lows. So, trend remains lower, and risks are to the downside, as I've been saying. The S&P 500, we had seen on Friday that, that this little trend line had been broken late in the day, and that led to further selling in here today. Obviously, it was pretty much selling all day right up to the final half hour when we saw a strong rally with some volume. Overall for the day, though, very light volume, and again, it'll continue to be light volume, which means you've got to be quick. You've got to stick to the liquid issues. You can't be trading these little low volume issues. You've got to stick with the ones that are where there's volume, and the ETFs continue to be gaining more market share. I think they're getting more of my trades. They're getting more of a lot of people's trades that I people that I talk to as well. So we've got this level in here at about 85.5, 85.40 actually. That is our short-term level of support, and that's about where we have that trend line now. We've got a 5-day moving average flattening out, just starting to turn lower. So continues to be a very risky market. It's we're in a bear market.